uncover the hidden gems of the crypto market. Are you ready to discover the next big thing in investing? Get ready to embark on an exhilarating journey with us as we hunt for small-cap coins with the potential to explode. Join us as we dive deep into the world of small-cap cryptocurrencies, exploring their untapped potential and uncovering opportunities for growth that could turn your investment into a fortune. Whether you're a seasoned investor looking for the next big winner or a newcomer eager to learn the ropes, Crypto.XL is your ultimate destination for insightful analysis, expert tips, and the latest trends in the small-cap crypto market. Remember, this is not financial advice. Only invest money you can afford to lose. Don't miss out on the opportunity of a lifetime. Hit that subscribe button and join us on this thrilling adventure to uncover small-cap gems that could skyrocket your portfolio to new heights. Let's make 50-100x gains together.
And we're live. Good day, guys. This is Crypto.XL, back today with more crypto updates and news. And as predicted, the Ethereum ETF has passed. This marks a historic moment in crypto land and crypto history. And this sets a precedence, a long-term precedence that can change the landscape of crypto as we know it. Now, as you know, we have a 4-year cycle in Bitcoin, and Bitcoin is usually has always been the first mover. It has a first mover advantage, and it steers the rest of crypto to follow suit and to take the same trading path as far as how the chart looks. So the other cryptos are a derivative of Bitcoin. They do multiples of Bitcoin. So depending on the market cap of the crypto, the lower the market cap, the higher the multiples, right? Instead of a 2x, the lower you go, you might get a 5x, a 10x, a 15x, etc. And then there are cryptos that are so small and so volatile that they might not make it throughout the entire cycle. They disappear. And actually 90% of the cryptos disappear during the bear market. And that's why this Ethereum ETF, the passing of the ETF, sets a historical precedent, because now you're going to have even more outlays of money being pumped into Ethereum, which will alter the way the cycle looks. So we now have so many on-ramps that are going to be coming into crypto in general through these ETFs, both Bitcoin and Ethereum, that the highs of where the price points of where Bitcoin and Ethereum could reach in this current bull run is now, it has to be projected, and it's going to be exponential, right? So ETFs, the money from ETFs, the bulk of it do not flow in day one or week one or month one. But if you project this over the entirety of the bull run, we're talking about hundreds of millions of dollars. So the end valuation of something like Ethereum, I was expecting somewhere around $10,000. But again, with this ETF, you don't know what could happen. You don't know how high we can go, or maybe it disappoints. That's a possibility too. But because of the liquidity cycle, because of the presidential elections, because of all of the factors where we are in the cycle is the most key contributing factor, is the biggest one. The fact that we are in year 3 of the 4-year cycle. I'm cautiously excited. I'm thinking that a lot is going to happen. Fireworks are going to come, and we're now using the 2021 prior all-time high as support, and the cost to mine one Bitcoin is above $60,000, right? So we are at a really good place as far as people willing to DCA in especially into the altcoins, because the altcoins have not had their parabolic leg yet. What I mean by parabolic leg, I mean the biggest leg of the bull market. That has not happened yet. So that is also something that's to come. So obviously, I mean, I'm DCAing and I've been DCAing for quite a long time. I would say for over a year now, and I'm just enjoying the show, right? And the way that I see this thing playing out is no matter what happens, like let's say I do not sell the top exactly at the right time, I will be in so much gains from since I was investing from the inset that it'll be hard for me to be in losses at that point. I mean, now it's a little bit tricky too, but I could just imagine. I was going to say 2025. I mean, not even 2025, even at the end of 2024. Look where we are, guys. We're on top of. Currently, we're at 68K, right? So we're a little bit below the prior all-time highs, but we're hanging around the levels above 60,000. And any bounce from this point could be a tremendous bounce that could push us towards 90,000, 85, 90,000. And that leg could happen quickly, right? We could meander and go back and forth playing ping pong for another month, but once that leg happens, the leg could happen in a period of 2 weeks. So it's very risky to be outside of the market because the parabolic leg of the market could take 3 months, and if you're out of the bull market for those 3 months, then you've pretty much missed everything. So I'm not trading. I'm not trying to be cute, jumping in and out of positions, because this leg right here is a leg that I'm not going to take a chance and miss. Because if I miss this leg, I'll have to wait 4 years to get another leg of similar comparison. So we're not going to do that. We're just going to slowly and methodically build our bags, and then we're going to catch this. Okay. And at that point, I could start DCing out. I could take some good profit, and I could leave some of it in case, hey, what if we go higher? If I'm investing back here, right, or I'm investing back here, the market's not going to come all the way back down to this. I think that's extremely unlikely. I don't know what would have to happen in the world for that to happen. If you look at all the prior bull markets, Bitcoin does not come all the way back down to the prior lows of the prior bear market. That doesn't happen. So if you accumulate early, then you lower your risk. So I could afford to keep a small bag in the market. When I say small, I mean something that is, a small percentage of my portfolio, 5%, 7%, whatever I consider small. I could keep that in the market indefinitely. And if I lose that 7%, then I take that as, the cost of doing business. Right. So, and I don't mind doing that. And so basically I'll be covered on two ends. If we end up having an extended bull market into 2026, because now we have ETFs and we have not had ETFs before, and Bitcoin and crypto becomes more stable, and we now have constant inflows even during what's supposed to be a bear market, and we have high valuations of Bitcoin and Ethereum, and Bitcoin hovers around the 80,000, and that becomes their base. If that were to happen, even though I don't believe that's going to happen, but if it were to happen, I would still have a small amount of crypto in the market, so I will still benefit from it anyway. If what I expect to happen happens and we end up coming back down, I would have taken significant profit on the way up. So either way, I have my bases covered. And the Patreons know the game plan, and we're focused, and we're in really good profits. And we are accumulating during these market pullbacks. We're not worried at all. We're stoic, and we have a plan. So, speaking of which, I want to see what the plan is of our officials. What are their plans for crypto?
Now discuss this and more. Jake Clayton, a former SEC chairman, who seems
Congratulations for those who took the Ethereum trade, by the way.
Becky were scratching our heads a little bit about what we're seeing in terms of what's really being approved and what's not really being approved and how this could even work.
Yeah. So there's two pieces.
Lay it out.
There's two pieces of approval for one of these types of products. There's the listing approval, which is what happened yesterday. And then there's the approval of the product itself, which is still pending. What's that is called the registration statement. That we need to find out. But let me say this product is eligible for listing, but it will not actually be trading until that registration statement is approved.
In theory?
So it's a step in the direction.
But does it mean it's inevitable?
I think it means it's inevitable. We went through the same process with the Bitcoin product,
right,
where almost all of the questions were decided. The question that was decided yesterday, to speak that technically, is that the market is efficacious enough for this product to be listed on the exchange.
Okay, but let me ask you a question.
That was what was decided. But there are other questions out there.
Oh, well, let's talk about those questions. But
Yes, it's efficacious. So basically, they're just going over semantics. They've pretty much approved the product. And again, this is what I was talking about, that it's going to take a while for you to actually see the money inflows come into Ethereum, into the Ethereum product itself, and into the Ethereum crypto. It's going to take a while for you to see that the money coming in. But what I want us to be aware of is to note that there's hundreds of millions of dollars going into the Bitcoin ETFs as we speak, right? So Bitcoin is starting to see those cash flows come in, and it's affecting the price of Bitcoin. Ethereum has a lower market cap than Bitcoin. So once we get hundreds of millions of dollars flowing into Ethereum and the money actually starts to affect the price of Ethereum, that's where we could get the parabolic leg in Ethereum. So, I mean, I was telling you guys to acquire Ethereum over a month and a half ago, or I was suggesting what would be a good move. I was not giving financial advice because I can't give financial advice because I'm not a financial advisor. But I was showing you guys what I was doing, and congratulations to anyone who was paying attention to that.
As you know, Gary Gensler and the SEC went kicking and screaming to allow the Bitcoin ETF, and only did so because a judge effectively said you have to. This is different. So what is different this time?
What is different this time is there was a settled issue of whether the underlier, Bitcoin, here the underlier is Ethereum, was a security or not, or transactions in Bitcoin were securities transactions. The SEC has not definitively said, up till now, and they still haven't definitively said, that underlying transactions in Ethereum are not securities transactions.
Is part of this because of what Congress just did this week to pass this first crypto bill and basically say it's going to be the CFTC that is overseeing all of this? Is this them putting another chip on the table saying...
When Gary Gensler was a professor at MIT, he stated that Ethereum was not a security. There's video evidence of this. He also mentioned Algorand and praised Algorand. So what you're seeing with all of these court cases and lawsuits is you're seeing a stalling process. If you know that the end result is that the SEC will lose these court cases, you can start accumulating, right? And use the news and the FUD as a smokescreen to lower the price for you so you can get really good entries. They know they'll lose, actually. This is a plan. And culminating close to the presidential election, do remember over a year ago, I was telling you guys that the Democrats are going to be walking back their tough crypto stance, and that there's going to be stimulus packages, and also the interest rates were going to come down, and risk on assets were going to skyrocket. Remember, I was telling you guys this over a year ago. And for those of you who were paying attention, everything is falling into place like dominoes, right? I really do think we're going to have high valuations on all of these securities. I think we're good going into 2025. Actually all the way into Q4 of 2025. I think we're going to be in a very solid state. And another thing I will say, $1,000 invested at the lows of the market is going to be valued more than maybe even 100K near the tail end of the market, depending on how you play your positions and what crypto, in this case, you get into. If you have a low risk tolerance, you don't have to look at the small caps on my channel, because I cover the small caps, right? Because I'm interested in making life-changing gains. So I'm focused on cryptos that can do 50x and these kind of multiples. But you do not have to focus on that if you don't like the risk, because those small caps are become a hero or leave a zero, right? They're either going to do really, really well or they're going to fail. If you don't like that risk and those kind of odds, you can focus on Bitcoin and you could focus on Ethereum. And why would I mention Bitcoin now when Bitcoin's at 67K? Obviously, you're not going to be able to, if you're just talking about like a normal salaried employee that's just getting into the market, you're not going to be able to retire in next year or 2 years from Bitcoin. I would say it's highly unlikely, right? Because we're already at a 67K multiple. But moving a little bit more down the risk curve, if you look at Ethereum, Ethereum is on the precipice of doing multiples. By multiples, I mean hundreds of X's. No, I did not hundreds of X's, hundreds of percentages, right? So Ethereum is about to do a few X's. So, and it's low risk, relatively speaking, in the realm of crypto. Another thing to mention is that these securities can now be invested in through 401k plans and through retirement plans. They have derivatives that cover Ethereum, Bitcoin, and Solana, believe it or not. Solana has a derivative that you could invest in through your 401k plan. So I would be looking at these. These are, you don't hold the actual Ethereum, you don't hold the actual Solana. In this case, you hold futures, right? So it's not the actual spot. However, it covers the price performance of Solana. So if Solana ends up doing an 8x from here, you can get an 8x on your 401k, and you're not going to be able to get an 8x on your 401k investing in the stock market. It's just not going to happen. Whereas if you have your 401k or a portion of your 401k, again, I'm not a financial advisor. What I'm talking about is super high risk. But again, you're not going to have the potential of making an 800% investing in Apple stock, in Amazon and Tesla and these kind of companies. Just not going to happen. Whereas if you play your cards right this bull run, it's a possibility with Solana, right? But back to Ethereum. Ethereum is going to do multiples. Once you get the multiples in Ethereum, you can take the multiples from Ethereum and look into the next layer one. You could look into the next Solana killer that's going to become a large cap. I would keep my eye peeled for that, right? And none of this is financial advice. Make sure that you understand that anything that you decide to do is something that you're deciding to do. I cannot click buy for you, right? You weigh your options. You decide whether or not it's right for you. My plans are on the deep end. They're super high risk because I'm looking for life-changing gains. Okay. They're also, again, if any of these plans fail, the portfolio could go to zero. Do realize that. All right. Make sure you take responsibility. But congratulations to those who are listening, took the initiative, and everything worked out for them. But let's continue.
My view for a long time was that progress, development, whatever you want to call the space, was always going to be. What did they do this week with Congress or over the last couple of weeks? They made more clarity around custody and the cost of providing custody services for digital assets because they weren't happy with the way the SEC done it. Now with this bill, they're saying, look, we want a path for products like Ethereum, other digital assets, to be able to trade like securities. And whether they're classified as commodities, or whether they're classified as securities, we, Congress, want to see that path. And that's what you're seeing playing out.
Would you allow this yourself? You didn't when you were the head of the SEC.
Right. The question that was a problem for me, and I've said this many times before, was the market efficacious enough? Was that spot market for Bitcoin, spot market for Ethereum? And it's developed, remarkably over time, where people are very confident that trading is,
Do you think you might have been able to get your head around it? If you were in the position today.
Yeah, I can get my head around it. And I'm interested to see what the conditions will be for the Ethereum exchange traded product when it actually gets there. What is it that you have to show to prove that Ethereum is not a security, or if it is a security, how it works?
But part of the thing, and we used to talk about it, we used to use this analogy about Broadway tickets.
Yep.
Remember?
Yeah.
You want to tell the audience what Broadway tickets? Because I don't know if that piece of it's changed at all.
All right. Well, this is how you tell the difference between something that is a security and then becomes a commodity. Picture a play.
Yep.
Play hasn't started. I come to you guys and I say, you know what? I'm going to put this on. I'm going to get a great composer. I'm going to get a great producer, a great actor. I'm going to get a venue. Tell you what, give me your money and I'll give you tickets for that play when it's on.
Right.
You're making an investment. You're buying a security. Those tickets represent a security transaction. You're hoping that my efforts deliver a great return to you. 6 years later, the play is a huge success. Somebody walks up to the box office, buys the same ticket to the same show. That's just a ticket. It's a commodity. It's not an investment in the future of the show. That's how something that is used to build out a network, using a token to build out a network and say, if this network gets built out, your token's going to be worth a lot of money, is a security. And then when the network's built out, the token is just for use on the network.
Okay, so that was interesting. By that definition, there's a lot of things that we use today that could be classified as a security. So I do believe that that rule is implemented subjectively, depending on the political agenda of who wants to implement the rule. So being the fact that we're in an election year, and both the Democrats and the Republicans want to either establish power or retain power, the rules and the focus on the draconian rules on cryptocurrency are going to be rolled back. In other words, get ready for a heck of a bull market. We are going to go parabolic, and it's just a matter of time. I could give you estimates, right? I could say by the end of 2024, we're going to be crushing it. I'm looking at Bitcoin probably, touching the 85, 90K range. 2025, I'm expecting more bullish action. This all being said, by the way, guys, is that, these are opinions. Variables change over time. There could be new variables that enter the equation later during the year or early next year that we don't know about now. But as far as things are looking right now, it seems like we're on track, and it's going to be something quite spectacular. If I look at the crypto bubbles for the monthly, I see that Pepe is up almost 80%, and Bonk is up 30%, followed by Floki at 18%. So, and these are the top 100 crypto coins. So what this is telling me is that retail investors are focusing a lot on meme coins, and the reason why is because of the fear launch and the fact that VCs are not able to dump on top of their heads. So this is quite an interesting scenario that we have happening here in this bull run, because this is not normally the sector that is a top performing sector, but it happens to be the case this time around. What I will say about that is, for every meme coin that does what Pepe does, there are over 1,000 of them that go to zero. So I've been looking at the meme coin game, and what I've been seeing is that a lot of them, when they first come out, they pump up a lot. They pump up really, really high. But after 2-3 months, they die out and they go to zero. So while I am staying on top of the meme coin game, I'm a little bit reluctant to put a significant part of my portfolio into meme coins because of the risk involved from rug pulls and from them going to zero really, really quick. I think most of the gains are probably made by insiders who give the coins to their friends and their family and their colleagues, and then they release the meme coins to the public, and then they get it pumped on social media. But by then, the coins have already gone 10x, and then you come in to buy it, and you get 40% up, and it's going up and down, and then all of a sudden, one day it just plummets. So again, I'm a little bit hesitant and reluctant to push meme coins. I'd rather invest in strong projects that have a good use case that I know retail are going to gravitate towards in the long term. In other words, I've been setting my foundation, and setting my foundation and building my home with brick. Like the Three Little Piggies, instead of building my house with straw, I'm building it with brick. And so I'm doing the work now. So I think that's most of the information I wanted to convey. If we continue to go sideways with Bitcoin, that's in our best interest. We don't want to head straight up right away. The longer that we stay in this range, the better. It's nice that we are using the prior resistance as support. I will definitely say that. That's definitely a really good sign. So, maybe we stay here for a while, and once we take off, guys, I think that's it. We take off, we blow this entire thing to 73K, we blow it we start heading towards 85K. And I think after that, that's it. And then we come back down and we test the 73K that we just broke. And that's it. If people did not get in by that time, and now they're trying to get into crypto, there's still gains to be made. But look at all of this. This is where, they should have been buying here, here, and here. Because now the risk is higher, right? So let's say we break past 73K. We start heading up to 85K. And then people come in to buy at 80. Maybe they buy at 80, maybe they buy it at 77. And then we go to 90, 95. So they're in profit. But then it comes back down to retest the 73K. If it comes down to retest, it's not a good feeling, and depending on which crypto they buy, I'm assuming they're buying altcoins at this point, and the altcoins are down 80%. It's not really a good feeling. And, people might get worried when they see it coming down and they might start selling. They start selling and then we retest and then we take off from there going into 2025. And we end up seeing some ridiculously high returns on altcoins. But during that whole shakeout, which I just mentioned, a lot of retail is going to lose money during that shakeout. So I would just buy on the wicks. When we come down, I would buy on the wicks and set myself up.
Crypto market. Remember,
so the more
this is not
now
financial
and
advice.
earlier, the less I
Only
have to
invest
buy.
money you can afford to lose.
But
Don't miss out
that's
on the
it for me.
opportunity of a
This has
lifetime.
been
Hit that subscribe
Crypto.XL with
button
your
and
market
join us
update.
on this thrilling
And I'll see you
adventure
on
to
time.
uncover small cap gems that could skyrocket your portfolio to new heights. Let's make 50-100x gains together.